Looks like we're all good to go. Okay, so today the lesson is going to be correctly using PE ratios because this is often something I see a lot of people not using correctly. Um, so I just wanted to go over PE ratios essentially and a really smart way that you can use them um, to beat the market a lot more accurately than how most people tend to use them. So, first we'll go over what PE ratios are, and then we'll go from there. So, um, and by the way, if you guys ever need a source for anything, I would highly suggest Investopedia. If you can't tell by the name, they're essentially like Wikipedia for investing and finance. They have lots of really good information that's non-biased, and they just give you the info. They don't mess around or try and convince you to buy anything or anything like that. They just give you solid advice. So, PE ratio is the price to earnings ratio, which is used for valuing a company, measures its current share price relative to its earnings per share. The price to earnings ratio is sometimes also known as the price multiple or the earnings multiple. So if you ever hear anyone use those terms, they're referencing the PE ratio. It's used by investors and analysts to determine the relative value of a company's shares in apples to apples comparison to others in the same sector. It can also be used to compare against its own historical record or compare aggregate markets against one another over time. May be estimated on a trailing or forward basis. All right, so pretty self-explanatory. Here's the calculation if you ever want to know. It's market value per share over earnings per share. Pretty simple, not too complicated of a calculation formula. Sorry, that's what I was trying to think of, formula. So it's widely used by people to determine stock valuation and essentially check which companies are performing better, right? You usually want a lower PE ratio, but not too low, and we can get more into that. Um, and yeah, uh, essentially, it's a good way to evaluate stocks. So now here's something that I see a lot of people. This is what I mean by not using it correctly, is a lot of people don't know that you can compare bond rates with PE ratios. So let's say you have a stock and its PE ratio. Hey, what's up? Anyways, let's say you have a stock and its PE ratio is 17, right? You can compare that PE ratio to other companies in the same sector. And if it has the lowest PE ratio, that's good. You're finding the company with the most growth value to continue its earnings while also comparatively doing well. However, you can also compare it to the 12-year bond rate. Now, why would you want to compare it to the 12-year or the 10-year, my apologies, the 10-year bond rate? Why would you want to do that? Well, the 10-year bond rate outperforms the S&P. Okay, I know it sounds weird because you're like, what? 10-year bond rates usually only give you like 5 to 10% year over year. Right, but the market fluctuates a lot. And when you look at it as a comparison, you can see right here. When you look at it as a comparison over the long term, like we're talking really long term here, like a lifetime, then do I have any favorite ratios? I do. I prefer I like using the PE ratio and the EP ratio. That's another one a lot of people don't know about. Um, and just overall, I do use financial ratios, but I use them in a comparative sense. So a lot of them, I'm either comparing companies in the sector or I'm comparing to the company's performance, or like I'm showing here, I'm comparing to the 10-year bond rates. I usually use all three, no matter what ratio I'm using to try and determine a company's value. So, anyways, thank you, Daniel, for that is a good question. So, comparing the PE ratio to the 10-year bond rate will tell you whether or not a company is overvalued or undervalued compared to the entire economy, right? Well, it's not affirmative, but it's a really good assessment of determining if the company is over or undervalued compared to the economy. So how would oh yeah, there's also a Seeking Alpha article here I found from 2022 where he does this exact thing. If you want to read it, I can put it in the chat. But anyways, um it's a really good way to determine if a company is under or overvalued compared to the economy. So how would we do that? Well, we take the 10-year treasury rate, right? Or 10-year bond rate, and then you, sorry, that's the notification I gave out earlier. You add it to a base rate. Usually that's 3.5. It's different depending on what country you're in or the economy you're trying to compare it to. US is 3.5, and then we divide 100 by that total number. Okay, so, and this will give you a PE ratio that you can use to compare stocks. I'll pull up my custom Google Sheet here and show you what I mean. So, here I have the custom base rate by 10-year treasury bonds right now is 13.43. Unfortunately, this stock doesn't have a PE ratio. We can pull up Apple here and show you what I'm talking about. So Apple's is 30.33. So this means that the company is overvalued compared to treasury bonds, which isn't necessarily a bad thing, right? No one would say don't invest in Apple. But if you're a value investor or a growth investor and you're looking for a long-term position to try and beat out the market, then this isn't going to be a good pick for you, right? But if you're trying to invest for, say, retirement, or you're just trying to invest to hold a company for a lifetime, this wouldn't be a good valuation to go off of. So it's definitely something you want to keep a lookout for, right? And that's definitely something that I think is very interesting and a lot of people don't realize you can do. So definitely try and keep it in mind because the PE ratio isn't the only one you can do. You can compare a lot of ratios using treasury bonds to evaluate stocks. And it's a really good way of trying to grasp kind of where the economy is at right now and what kind of ratios you should be looking for, right? So, like I said, to summarize, with the PE ratio, you want the smallest compared to other companies, but you want it higher than the PE ratio for the 10-year bonds. Okay? And that's a good way to try and start evaluating companies. You shouldn't go just based off of that, just because a company follows into those requirements doesn't mean that you should immediately buy the company. Obviously, evaluate it, do some due diligence, don't just buy based off of one ratio. But it's a good way to use the PE ratio and something that I think a lot of people don't realize. That's um that's something I've learned from a couple hedge fund traders that I talk to is using the PE ratio compared to 10-year bond rates. All right, so now that the lesson's over, let's get into evaluating the market. So right now, the Buffett indicator um, is still overvalued. We're still really swinging real high up in there compared to the last couple of years here. We can zoom out, go back out to 2020. This was around the COVID crash and kind of see that dip there. Overall, we're still soaring pretty high, but we have come down a bit from that overall high. So still overvalued, still not really coming down. When we see that dip, it will be a pretty big dip, but I don't think it'll be too massive that we'll see like a crash or anything. You know what I mean? Like COVID, that was a pretty big sudden dip. Whereas I feel like when this starts coming down, it's going to be like more this right here, where it just kind of whittles down a little bit, then starts coming back up. Economic calendar for next week. Obviously, the 15th, we have nothing. That's Martin Luther King Jr. Day. RIP the King. Uh, and the 16th, we have Empire State Manufacturing Survey and the SCE Household Spending Survey. Definitely both of these really you should pay attention to, but if any, the manufacturing survey definitely will have an effect on the market. The 17th, we have a lot going on. We have retail sales, a business leaders survey that's going to include a lot of CEOs like Walmart and a lot of big companies that are going to be talking about their businesses and such. We have imports and exports coming in, industrial production and capacity utilization, business inventories, and then outlook at risk. So definitely a lot going on 17th. Make sure you're keeping an eye on those. Those are all going to be coming in early in the market. As you can see here, 8:30, 8:30, 8:30, 9:15, and 10 a.m. So definitely keep an eye out for those. Initial claims is coming in on the 18th with new residential construction, and then the Philadelphia Fed Manufacturing Survey, and of course the weekly economic index. So definitely going to be a big between these two. Lots going on. The 19th, Michigan Consumer Survey, which is preliminary, so don't worry about it too much. But if you are invested in any stocks in Michigan, I definitely would pay attention to that. If you also are just consumer focused on the consumer sector, that's still good to pay attention to. NAR existing home sales, so that's going to be good. Between this and the new residential construction, that's going to be big for the real estate market. And then we have the New York Fed staff nowcast. So overall, the next week is going to be a lot of strong economic events. Definitely something to pay attention to and keep an eye out for. Fear and greed index is on greed, so we've come down a bit from last time. Last time we were looking at it, it was at extreme greed, so definitely come down a bit since we've last looked at it. Still in the greed though, which means the U.S. market is driving up overall, and yeah. Definitely worth keeping an eye out for. The momentum index has done insane this last bit of the year, right? We're already up 2.3%. Uh Sorry, no, great content so far. Do you stream on Twitch or TikTok? It's hard to watch a stream on YouTube. I'm looking at other streaming sources. So far right now, YouTube is the easiest, but we are looking at setting up a Twitch and TikTok in the future. We're just still figuring out all the necessary things and setting it up. Thank you for asking. So 5 day so far, the momentum index has definitely been going up. Really, big jump here overall. Definitely worth keeping an eye out again. We've gone up 3.58%, which is wild, right? I know it's only 3%, but that's pretty big jump, especially for beginning of the year. Shows that we're gaining the momentum in the economy overall. So definitely a good thing. Um, and then hold on, I have some notes here for some events coming up. So Thursday again, Monday, Martin Luther King Day. Nothing going on. Tuesday, well, we have lots of options trading going on some companies. ULF, BKKT, RYZB, DSKE, and GWH have all seen way higher than normal activity and an elevated level of short interest. So definitely keeping an eye on those if you're an option trader. They've also been getting they're pretty overbought in the 14-day RSI. So definitely worth keeping an eye out. Um, Oversold stocks we got on the 14-day RSI. We got GMM, AIR, DCGO, ACI, and KR. Those are all oversold and have higher than normal option activity. So definitely worth keeping an eye out for this coming week. Those stocks are definitely coming in with some moves. And then we have some reports coming in from Morgan Stanley, Goldman Sachs, PNC Financial, and Interactive Brokers. All four of those financial traded stocks traded lower after their last earnings report. So options trading implies a double-digit swing in share price for CVGW after its reports. So definitely keep an eye out on those two. And then 11 a.m. we have the Federal Reserve Board Governor Christopher Waller giving a speech on the economic outlook this year. So that's definitely worth checking out. We all know Fed has big movements on the market whenever they give a speech. Wednesday on the 17th, Samsung will hold its Galaxy Unpacked event to showcase new products in the Galaxy S24 series and unveil a Galaxy AI. So I don't know if you guys remember, Google unveiled their AI. That was pretty huge for the market. Did a lot of movement, of course, for Google, but also lots of other companies. Samsung's unveiling their own AI system, and of course, that's going to be pretty big for the market. Um, we also have notable companies that are giving out reports: PLD, Charles Schwab, U.S. Bank Corp, and Alcoa. I don't know if I'm pronouncing that right. I hope I am. Those are all giving out their reports that are due. And then, of course, at 8:30 we have the retail sales report by the Census Bureau. A lot of people are expecting a zero point 0.4 month over month increase, which is really good for the market, right? We want those retail sales. 2 p.m. we have the Federal Reserve Binge Book report that will be released, and then at 3 p.m. we have the New York Federal Reserve Bank President John Williams giving opening remarks before a hybrid event titled An Economy That Works for All Measurement Matters. So these are all things to pay attention to on Wednesday. Definitely going to be a pretty big day for the market. And then Thursday, sorry, we got a lot. Circana will release U.S. video game results for a period of November 26th to December 30th, covering much of the holiday shopping season. The report will be of interest to game developers such as Microsoft, EA, Warner Bros., Sony, 2Take, Roblox, Ubisoft, Hasbro, GameStop, etc. So if you're invested in any gaming stocks or companies that are in the gaming area, definitely keep an eye out for that. It will also be pretty big for the market overall since a lot of those tech companies and companies in gaming are big to the U.S. economy. Notable companies due to report on Thursday are TFC, Key, KEY, FAST, and option trading implies a double-digit swing in share price for Burke after its reports. So definitely keep an eye on that if you are an options trader. And then 7:30 a.m. on Thursday, we have the Atlanta Federal Reserve Bank President Ralph Bostic scheduled to give brief remarks on the economic outlook. So definitely keep an eye on that. Would have affected Barheimer, would have affected Hasbro. Barheimer? Was that? something that I don't think that was. Um, I'm not sure who Barbenheimer is. Hold on 1 second here. I can give you. Oh, oh, that's like a name for the cultural phenomenon which proceed of two. Oh, okay. Um, I'm honestly not sure. I would have to look into that. I didn't even know that was a thing. Thank you for letting me know. But yeah, I definitely have to look into that, look at some statistics and see if anyone's written and uh done any deep dive research into it. Um I would assume so because I believe Hasbro is still big in the toy industry, but I wouldn't be 100% sure on that one. That is a good question, Daniel. But yeah, I would definitely have to do a lot more research onto if that affected Hasbro or not overall in its economy. Um, so where was I? Federal mean Friday. Friday, we have shareholders. Yeah, thumbs up. So Friday, shareholders with Spirit Reality Capital will vote on the acquisition offer from Reality Income. Definitely something to keep an eye out for. Could be a good acquisition for the company if they vote to take it. Notable companies due to report include Ali Financial, Comsira, Fifth Third, and Travelers, all giving out reports. And then at 10 a.m., we have December existing home sales report will be released, expecting a print of 3.84 million versus the 3.82 million in November. A nice little increase there. And then also at 10 a.m., we have the January reading of Michigan Consumer Sentiment Survey will be released. So I think I already went over that on the economic calendar, but definitely worth keeping an eye out for. And then just a side note, not really, but I saw this article before I started the stock hour, and I thought this was pretty interesting. So apparently Disney is in talks with the NFL of giving them a cut in ESPN, and that is very interesting because I know a lot of people might be like, "What? NFL doesn't have a cut of ESPN?" Like you associate with ESPN with the sports, so why wouldn't they? But yeah, as far as I know, no sports companies have a cut in ESPN. It's all owned by Disney. So definitely something worth keeping an eye out for. This could be big for the NFL and would definitely pose like interest in both companies, right? The NFL definitely wants the ESPN to succeed because that brings them more business. But especially if they have a stake in it, then they could be investing into it and actually helping it thrive, right? So, definitely worth something keeping an eye out for. Definitely interesting. Um, before I end this, does anyone, sorry, before I end this, does anyone have any questions, comments, anything they want answered from the lesson or anything like that? All right, I'm not really seeing anything here in the chat, so I think we're all good. But yeah, thank you for coming, guys. Thank you for watching. I really appreciate it. Remember, we do this every day, well, every day, every week on Sunday at 11 a.m. You're definitely welcome, Daniel. So definitely come back and uh, check it out next week. I try and give high quality info and, of course, a lesson every week. Again, appreciate you guys coming. You're definitely welcome for the stream. And hopefully I'll see you